markets experience a surprising rally as optimism returns following signs of easing trade tensions between the US and China. But here's where it gets controversial. While stocks and commodities are bouncing back, the underlying issues remain complex and unresolved. The core story is that U.S. futures for the S&P 500 and Nasdaq 100 surged by over 1% after President Donald Trump indicated a willingness to negotiate with China, easing fears that had recently gripped investors. This shift in tone came after a period of heightened anxiety triggered by aggressive trade threats, including Trump's earlier warning of potentially imposing tariffs up to 100% if China continued its export restrictions. Meanwhile, the markets responded to this more conciliatory approach with a variety of movements across different assets. Treasury futures dipped slightly, reflecting a modest shift in investor risk appetite, while crude oil prices jumped more than 1%, signaling confidence in a potential resolution. Cryptocurrencies, which had been in a free fall on Friday amid a record sell-off, stabilized as traders reassessed the situation. Precious metals also made notable moves. Silver prices soared close to a record high, driven by a historic short squeeze in London and ongoing trade tensions that kept the market volatile. Gold prices, on the other hand, reached a new all-time high, highlighting the ongoing concern and uncertainty among investors about future economic stability. And this is the part most people miss. Markets are often driven by perception and sentiment, which can shift rapidly based on headlines and political signals. But what does this mean for the long term? Will these positive signals translate into a genuine thaw in U.S.-China relations? Or are we merely witnessing a temporary pause before the next escalation? Share your thoughts. Do you believe this shift is sustainable? Or is it just a fleeting rally driven by short-term optimism?